we've been hearing for about a decade that cryptocurrency is going to be the future of payments, but there's only been one company most people would have heard of that's accepted any of them for a payment, and that was Tesla. And they no longer do. So now there's sort of no large companies really that accept it. So what it seems to be now is sort of a speculative token and a speculative bubble, that people are buying Bitcoin because they think the price will go up and they'll be able to sell it to somebody else. And so it's a speculative bubble, and I think history says that those usually end in tears.
But there have been lots of warnings for a long time about cryptocurrencies and bubbles like this. What's prompted the RBA to come out now with this warning?
Well, I think what Tony Richards' speech yesterday said was consistent with what the Reserve Bank has been saying for quite a long time. That these cryptocurrencies are not taking off as a payment instrument, and the inherent features of them make them fairly unsuitable for one, particularly the fact that they tend to be extremely volatile. I mean, just the last few days, the price of Bitcoin has dropped 10%.
And is the RBA the first central bank to come out with these sorts of warnings? What are other central banks doing on this?
I think most central banks would have the same view. Certainly the Bank of International Settlements, which is a sort of club of central banks, if you like, in their annual report a couple of years ago said that Bitcoin was an environmental disaster with very little use case.
So do the RBA's words of warning, do they apply to these many smaller cryptocurrencies, or are they targeted mainly at the main one, which is, as you say, is Bitcoin?
Bitcoin, but probably even more so for some of the sort of meme-based coins like Dogecoin or Shiba Inu and so on, that seem to just be valued because they're related to the dog that Elon Musk owns, or they relate to some celebrity's tweet, or we had a squid token based on the Korean drama series, for example. So these things are having even less use and are just purely speculative, even more dangerous. There are a class of cryptocurrencies known as stable coins that purport to be backed by solid assets. The problem there is, are they truly backed in that way? So the biggest of them, Tether, recently had to pay a few tens of millions of dollars of fines for lying about the extent of their backing.
So what is the advantage of having cryptocurrencies? It's not regulated, it's not backed by a central bank. So why do people buy it other than to try and get a quick buck?
Well, I think in most cases, given that they're not using it to make retail transactions, they're buying it just for speculative reasons, because they're hoping the price will go up and they'll be able to sell it and make a profit.
So what's the profile of somebody who invests in cryptocurrencies? And John, the RBA seems to be suggesting that it's people who are following fads. But how sophisticated are investors? Are they the so-called mum and dad investors, or are they from larger organisations?
Tends to skew towards younger people, unsurprisingly, and people who are more comfortable with operating on the internet and so on. In some cases, it's people who are trying to save a deposit for a house, have given up on bank deposits because interest rates are so low, and are looking for something which they hope will rapidly increase in value. So it's a fear of missing out is what the expression is often used, that people have seen their friends had some cryptocurrency that went up in price a lot, so they're hoping they'll be able to jump on that bandwagon too.
What's your view on this, John? Is the RBA right to be issuing this warning?
Absolutely, I totally agree with them.
Okay, John Hawkins, thanks very much.
Thank you.